Dear students, welcome to my channel. In this video, I will be discussing a problem on preparation of the necessary accounts such as a royalty account, short working account and landlord's account. Kindly watch the video till the end, like it, share among your friends and subscribe the channel. If you already subscribed to the channel, kindly ignore this. And if you have any comments, please put your comments in the comment box. Now, let's move to the whiteboard. This is a problem on preparation of necessary ledger accounts. Necessary ledger accounts under royalty accounts. So this is a question which has appeared for the year 2017. So the problem is like this. Naveen, let me stress this here. Naveen company took a mine on lease from Prakash at a royalty of rupees 1.50 on rupee 50 paisa per ton of coal raised with minimum rent of rupees 20,000 per annum each year's excess of minimum rent each year's excess of minimum rent over the royalties is recoverable out of the royalties of the next 3 years. In the event of strike, the lease provides for proportionate reduction of minimum rent for that year. Accounts are to be settled every year on 31st December. The annual output of the first 5 years is as follows. So year output in tons. So year 2012, 8,000, 2013, 10,000, 2014, 12,000, 2015, 20,000, 2016, strike for 3 months. So the here output is given as 8,000. So prepare royalty account, short working accounts and Prakash's account in the books of Naveen Company Limited. So now let us go for finding solution of this here. So we need to calculate the minimum rent for the year 2016 as it is affected by strike here, and the royalty per tenant it is given the problem as 1.1 rupee 50 paise, and the minimum rent agreed is rupees 20,000. And then the right of recoupment is the next 3 years. So let us write down here. So calculation of minimum rent for 2016 equals to rupees 20,000 is the minimum rent into 9 divided by 12, that's equals to rupees 15,000. Now let us first prepare the royalty payable chart. So let me insert the table here. So here let me take the first column year, then output in tons, then royalty at rupees 1.50, then minimum rent, then short working, then surplus, then recovery, then irrecoverable, then amount payable to landlord. So now let us go for preparing the royalty payable chart here. So 2012, the output is given as 8,000 tons. So 8,000 tons. So the royalty here it will be rupees 12,000. The minimum rent equity is rupees 20,000. So short working will be 8,000. So there is no surplus, there is no recovery, So amount payable will be 20,000. And then 2013, the output here is 10,000. So the royalty payable will be 15,000. So minimum rent is 20,000. So here again the short working will be rupees 5,000. So the amount payable will be 20,000. So 2014 output is 12,000. So the royalty payable will be 18,000. That is 12,000 into 1.5, 18,000. So minimum rent payable is 20,000. So here 2,000 is the short working. So again there is no recovery, So amount payable will be 20,000. Then 2015. So here the output given as 20,000. So 20,000 into 1.5, that comes to 30,000 here. So 20,000. So now there is a surplus of rupees 10,000 here. While recovering here, so the right of recoupment is for next 3 years. So 2012 by 2015. So we have got 8,000. So entire 8,000 can be recovered. Similarly, 2013 should be recovered by 2016. So 5,000 is there. So total 2012-13 together will be 13,000, but we have got 10,000. So we can recover 10,000 here. So still it is there. So now irrecoverable will be nothing is there here. So amount payable will be 30,000 minus 10,000, 20,000. So 2016. So here in the bracket let me write a strike. So here the output is given as 8,000 here. So in the year here the output here it is 8,000 here. So the royalty payable will be 8,000 1.5, that comes to 12,000 rupees. So 20,000 is the minimum rent agreed here. Sorry, now we need to reduce the minimum rent, which we have calculated as a 15,000 here. So still there is a short working of rupees 3,000 here. So now there is no surplus here, so there is nothing can be recovered because of the deficit here, or there is a short working. So irrecoverable will be, so out of 5,000 we have recovered in the year 2015 to the extent of rupees 2,000. So remaining will be irrecoverable here. So here amount payable will be 15,000 here. Now let us go for preparing the accounts here now. So let me write down here, in the books of Naveen Company Limited. So we'll go for preparing first royalty account. So royalty account. So now let me insert a table here. 8 columns we require. So date, particulars, journal folio, rupees, date, particulars, JF, rupees. So now here the accounts are closed on 31st December every year. So when the royalty is payable at the end of the year on 31st 12, then it will be royalty account debited to Prakash's account, So the royalty payable in the first year is rupees 12,000. So 12,000 here. So at the end of the year, that is on 31st 12/2012, when it is transferred to profit and loss account, then the entry will be profit and loss account debit to royalty account. So royalty account is credited by P&L account. So that is 12,000 here. So now let me do the totaling here, 12,000. So here also 12,000. So second year, that is on 31st 12/2013, when the royalty is payable, then it will be royalty account debit to Prakash's account. Prakash's account. So it is 15,000. So on 31st 12/2013, the entry will be, when it is transferred to P&L account, profit and loss account debit to royalty account. So royalty account is credited by P&L account. So rupees 15,000. So let me take the total here, 15,000. So on 31st 12/2014, when the royalty is payable, then it will be royalty account debit to Prakash's account. So Prakash's account. So the royalty amount, it is rupees 18,000 for the year 2014. So when it is transferred at the end of the year, that is on 31st 12/2014 to the P&L account, then it will be profit and loss account debit to royalty account. So royalty account is credited by P&L account. So here it is 18,000. So let me take the total here. So 18,000. So the next one comes here, that is on 31st 12/2015, when the royalty is payable, then the entry will be royalty account debit to Prakash's account. So to Prakash's account. So the royalty payable here, it is 30,000. So on 31st 12/2015, when it is transferred to P&L account, then the entry will be profit and loss account debit to royalty account. So royalty account is credited by P&L account. So 30,000. So let me take the total here. So 30,000. So here also 30,000. So on 31st 12/2016, when the royalty is payable, then the entry will be royalty account debited to Prakash's account. So that comes to 15,000. So on 31st 12/2016, when this royalty is transferred to P&L account, then the entry will be profit and loss account debit to royalty account. So royalty account is credited by P&L account. So it is 15,000. So the total will be 15,000 here. Here also 15,000. So now we have prepared now the royalty account, which is a nominal account here. Then the next one will be here. Let me central a line here. So the next one we need to prepare Prakash's account here. So here Prakash's account. Prakash's account. Prakash's account. So let me insert a table here. So 8 column here. So date, then particulars, then journal folio, rupees, date, particulars, JF, rupees. So when the royalty is payable at the end of the year, so on 31st 12/2012 here, so 2012. So when the royalty is payable, then the entry will be royalty account debit, short working account debit to Prakash account. So Prakash account is credited by royalty, then by short working account. So here the royalty is rupees 12,000. Royalty account here it is 12,000. Then whereas the short working is in the first year, it is rupees 8,000. So 8,000 when it is paid on 31st 12/2012, then it will be Prakash account debit to cash account. So to cash account, so amount paid is rupees 20,000. Then now let us move to the second year, that is on 31st 12/2013, when the royalty is payable, royalty account debit, short working account debit to Prakash account. So Prakash account is credited by royalty account, by short working account. So in the second year, the royalty payable is 15,000. So 15,000. Then 15,000. So the short working here it is rupees 5,000. So let me write down here 5,000. So the total here it will be 20,000. So 20,000 here. Here it is paid on 31st 12/2013. Then the entry will be royalty account debit to Prakash account debit to cash account. So 20,000 here. Then the third year, that is on 31st 12/2014. So now let us see the chart here we have prepared. So again there is a short working, right? So when the royalty is payable, then it will be royalty account debit, short working account debit to Prakash account. So Prakash account is credited by royalty account, by short working by short working account. So royalty payable in the third year is rupees 18,000. So 18,000. So the short working here it is rupees 2,000. So on 31st 12, on 31st 12 2014, when this amount is paid, Prakash account debit to cash account or bank account. So that is rupees 20,000. So now let's take the total here, 20,000. So here also 20,000. So in the fourth year, that is on 31st 12 2015. Now let us see the chart here. Here there is the recovery of rupees 10,000, right? So when the royalty is payable, then entry will be royalty account debit to Prakash account. So Prakash account is credited by royalty account. Royalty account, that is 30,000. So now here there is a recovery of rupees 10,000. You can see in this chart. So when it is recovered here, then entry will be on 31st 12 2015. So when it is recovered here, Prakash account debit to short working account. Short working account. So recovered here it is 10,000. Then the balance is paid to the landlord here. So when it is paid here, Prakash account debit to cash account. So that comes to 20,000. So the total of this will be here 30,000. So here also 30,000. So now let us go for the last year. That is on 31st 12 2016. Again this is short working here. So on 31st 12 2016, when the royalty is payable, royalty account debit to short working account debit to Prakash account. So Prakash account is credited by royalty account. So royalties we have got here rupees 12,000. So 12,000. Then there is a short working. So by short working account, so it is 3,000. 3,000 here. So 3,000. When the amount is paid here, so it is 15,000. There is a recovery that will not come here. So when it is paid here on 31st 12 16, it is to cash account. To cash account. So rupees 15,000. So here now let me take the total here, 15,000. Here also 15,000. Then the next one comes here. We need to prepare short working account. So short working account. Short working account. So let's take the credit here. So let me insert the table here having 8 columns. So the date, then particulars, then journal folio, then rupees, then date, particulars, then journal folio, then rupees. So now on 31st 12 2012, when there is a short working, then entry will be short working account debit to Prakash account here. So to Prakash's account. So in the first year, now let us see in the chart here, we have got 8,000 short working. So here 8,000. So on 31st 12 2012, by balance carried down. So the balance carried down is rupees 8,000 here. Then the next we should take the total here. So total 8,000. So here also 8,000. So on 1/1/13, so this is brought down here. So to balance brought down. Then the next one here on 31st/12/2013, again there is short working. So when there is short working, so short working account debit to Prakash's account. Prakash's account. So the opening balance brought down here is 8,000. Then in the second year there is short working of rupees 5,000. So now let us add here 5,000. So here on 31st/12/13, by balance carry down, that comes to rupees 13,000. So now let us take the total here. So 13,000. So here also 13,000. So on 1/1/14, so to balance brought down. So it is 13,000. Again there is a short working during the year 14 here of rupees 2,000 here. So when there is a short working, then the entry will be on 31st/12/2014. So here let me take here. So when there is short working, so short working account debit to Prakash's account. So in the third year we have got a short working of rupees only 2,000 here. So 2,000. So on 31st, now let us see, is there any recovery during the year 2014? So when you look into this chart here, there is no any recovery or e-recovery here. So on 31st/12/2014, by balance carried down, 15,000. So here also the total 15,000. So on 1/1/15, to balance brought down. So the balance brought down here is 15,000. Now let us see in the chart what has happened in the year 2015. In the 2015 there is a recovery of rupees 10,000. So when there is a recovery here on 31st/12/2015, so there is a recovery of rupees 10,000 here. So when it is recovered here, short working Prakash account debit is short working. So short working account is credited by Prakash's account. Then the remaining by balance carried down. So here recovered is rupees 10,000. Then now let us see how much is the balance here. 5,000. So here in 10,000 is recovered, so balance is 5,000. So now let us take the total here. 15,000. So 15,000. So on 1/1/16, so to balance brought down 5,000. So here in 16 what has happened, now let us see here. In 16 in the chart again there is a short working of rupees 3,000 and there is a recovery of 3,000. So when there is a short working here on 31st/12/16, so here when there is a short working to Prakash's account, here rupees, again we have got short working in the last year rupees 3000. So 3000, and on 31st/12/2016 there is a e-recovery of rupees 3000 which is transferred to P&L account, which is the loss to the lessee here. So when it is transferred here, then the profit and loss account debit to a short working. So short working account is credited by P&L account. Then there will be balance here. So by balance carried down here. So it is 3000. So here there will be 8000. There will be still balance of rupees 5000 here. So now let us take the total here. 8000. So 8000. So this is the balance which is remaining in the short working account. So why it is? Because still the agreement may continue here. So this will be brought on 11/17 to balance brought down. So that comes to rupees 8000 here. So thank you.